Well, speaking of financials, let's put the spotlight on Shriram Finance. There were some fresh developments at the company, which they shared yesterday. The company has raised over $306 million from development financial institutions. To talk about this and, of course, to discuss the overall business environment, we have Mr. Umesh Revankar, Executive Vice Chairman at Shriram Finance, joining in. Mr. Revankar, always a pleasure having you on the show. Thank you so much for joining in. So I was going through your press release that came in yesterday. This is an external commercial borrowing, and you've got a lot of marquee institutions who've chosen to participate. So congratulations on that. But what does this do to your overall borrowing cost? Just give us a whole mix. How much is local borrowing? How much is overseas? And at what rates did you pick up this financing? What does it mean for overall cost of finance?
Yeah. See, basically what happens is overall, if you look at my total liability side, 24% is the deposits. We are deposit taking NBFC, and the bank term loans are around 20%. Then we have a securitization done by a bank on the priority sale. That's around 18%. The external commercial borrowing, ECB loans and bond put together, it's around 18%. So overall, we would like to keep around 20% each. Around 20% is the capital from the capital market entities. So we would like to have 5 large sources with around 20% each. That is the strategy we have. External commercial borrowing, especially if it is a loan, normally comes at better rate because development institutes, when they participate for a social loan, we are able to get a better rate. So landed cost will be less than 9%, around 8.5 to 8.6, I can say, with all hedging cost added. So we hedge all international borrowing in the bond market or even the whatever we raise in dollars.
So you're saying that the total cost of this new loan that you've raised is 8.5 to 8.6, including hedging. Now, we're anyway in an environment which has become a little more easier for NBFCs, right? The risk weights that were hiked, they've been rolled back. The RBI has been pumping in a huge amount of liquidity in the system as well. So overall, in the last 2-3 weeks, what's the easing in liquidity conditions? And give us some sense of also what that means for your margins as you look at Q4 and then Q1.
See, Q on Q, if I look at for incremental borrowing, then 10 basis point, there is improvement, that is lesser. So to that extent, yes, we have the margins a little expanded, but I cannot say that it will translate into total what we call margin improvement. We need to wait till the quarter end for getting the numbers, because typically in the month of March, we also do large new vehicles, and new vehicle lending will be at little lower rate. So it may not have a big impact on net interest margin, but yes, it will be positive, definitely, better than the previous quarter. But going forward, I feel the liquidity situation being good, and as you rightly put it, the risk weight, there has been changed by the regulator, and the banks would be passing on some benefit to us. Immediately, you don't see that in this quarter. But going forward for next couple of quarters, I see bank translating that into a lower cost for us. That will help industry as a whole.
So just reiterating, you're saying you've seen 10 basis points improvement quarter on quarter in your cost of borrowings, and NIMs overall Q4, I mean, you see a favorable move. Just a last question, sir, on growth itself. Just tell us in terms of AUM growth. And the reason I ask you this is that there's a debate going on in auto financing. I mean, there are some analysts that are saying that the reason why two-wheeler sales are falling is that financing has become a constraint. But large OEM makers like Bajaj Auto say that's not really a concern. You tell us, you're in the lending business. Is there any constraint to financing of CVs at the lower end? CVs, used PVs, two-wheelers, etc.
No, two-wheeler especially, third quarter is always a large, and fourth quarter will be lesser than the third quarter. That's every year, because third quarter being the festive period,
Right.
So we can't compare between the third quarter and the fourth quarter. But
Right.
we have not seen, compared year on year, we have not really seen any negative growth. It is a little flat. It has not grown big, yes, because there
Sure.
were some geographies where
Mr. Revankar,
frequencies were
yeah.
there. Yeah.
Yeah, no, point taken. Thank you very much for joining us. Good to have you with us here. Yash